Hi everyone, in this episode we're going to look through the bull case and the bear case for Bitcoin and crypto. What do the probabilities tell us? Are we heading for an imminent dump or upward price potential? Stay tuned, it's going to be fantastic. If you're new, a very warm welcome and welcome back KS family. And please note, I don't have WhatsApp or Telegram. Let's run the numbers. Bitcoin is currently up 1.11% to 21,349. Ethereum is down 0.83% to 1632. The crypto market has been under an enormous amount of fear for a very long time, many months. As professional smart money investors and traders, we have to ask two questions. Is this price action like this? Are we going to see another capitulation event after this? Or is this price action like this and are we going to see a ramping up? Either could occur, so we need to be open to both. As we stack more and more probabilities together, we would hope to tilt one way or the other. And another thing that we can look at is the net unrealized profit or loss inside the crypto market. And this is related to Bitcoin. This is basically profit and loss, paper profits or paper losses. And when we see all of this red action, as we're seeing currently, that means people are holding losses when it comes to Bitcoin. And of course, as Bitcoin dominates the potential movement of the crypto market, the alts are suffering a similar fate. The question is, we've come down from this orange area. You can see the orange area here. We've come down. Is this a capitulation event or do we have more to come? As Bitcoin has become more mature and has reached more and more people, we're seeing less sharp sell-offs in terms of paper losses. But is this it? As smart money and professional investors and traders, we mark up our charts with the CTKS method. Then we get external perspective. We need to look outside the crypto market because the crypto market is part of a larger financial ecosystem. If that larger financial ecosystem is unhealthy, crypto will become unhealthy as well. The mistake most people make in crypto is only looking at crypto. That's a very understandable mistake to make, but we have to look outside the crypto market to gain a macroeconomic perspective. Despite the recent sell-off, what we've seen is the overall market trend is starting to get above resistance. And what do I mean by that? When we look at the All-Country World Index, the ACWI, that represents 23 developed markets and 24 emerging markets, covering 85% of global investable equity opportunity set and over $70 trillion, what we can see is that there was a really strong resistance line that was weakened. And we've also seen an upward level of higher low, this upward support. The markets are retracing at the moment, but they could find support either in this upward momentum line or this lower line. Just because price is just pretty much melting in the stock market doesn't mean that we're going to melt down. And if we do find support, we're going to want to find it fairly quickly, because if we look at the S&P 500 and look at the 9 sell-offs and recoveries in the S&P 500 since 1966, we definitely do not want to fall beneath this lower low right here. That could signal very negative price momentum to come. And what we've seen, we actually tested the upper boundary of this resistance. Price is actually quite healthy at the moment. It's important to be aware of news headlines, but if you look at the news headlines and you make all your purchasing and selling decisions from them, they will drive you utterly insane. So what is the bull case and what is the bear case? The bear case, if we take out this lower low, we could potentially be going down and seeing something like the GFC. If we actually consolidate around here and start to go up, that is a very good sign. We could see a wholesale recovery. And when we look at the economic factors such as the Fed, interest rates, inflation, all of these things, imminent recession, most people will just go and hide underneath their beds because that's what the mainstream media is telling them to do. But the truth is, the smart money actually buys in times like this. And we can see stock markets throughout the world are just going through a little bit of a retracement at the moment. Some stock markets are in a downtrend, and we can see China's stock market has been really heavily hit. But on plans of reopening, China could start to boom again, and that'll be really good for the global economic system. And Masterclass students, you can look at this live chart at any time by just visiting LV19. LV19 is global markets, Bitcoin and the Fed recession indicator. Looking at the S&P 500 is a really good idea to do. We can see we're still under resistance, and what we saw is this once resistance line is retesting as support. It's really early days yet to know if we're going to resume down, but at least we didn't slice through it. If we slice through it in the past trading session, that would be really negative for crypto, of course, and the stock markets, but we actually bounced from there. And you can see how closely Bitcoin is correlating with the S&P 500 in terms of its directional movement. This again is why we must look at the main markets. It gives us another way to stack probabilities, and the more stacking of probabilities you get, the clearer the picture is. Bitcoin trades 24 hours a day, 7 days a week, and when we look at Bitcoin overlaid with the S&P 500 futures, Bitcoin has been on an absolute romp. It's just romping up and up. If this momentum is held across the weekend, the S&P 500, which actually correlates with Bitcoin, is in all likelihood going to between 38.39 and 38.81. So just keep that in mind. We're just partially through the weekend at the moment. But this is a way the stock market investors can use crypto to understand potential movements in the main market. It's very valuable to do this. We also need to be mindful of the fact that price could come down. So where could it come down to as well for a bear case? Between 37.56 and 37.63. A lower one, 37.38 to 37.45. And a lower level of support, 37.04 to 37.11. Whereas a Stanfield level or SL is very fixed to a specific price, you can see these Stanfield zones capture a range of different prices. That's the key difference between them. When looking at the NASDAQ, first of all, we need to draw our main structure in. And what we can see, the NASDAQ is well and truly under resistance. It did manage to get just a little bit above this resistance and start to weaken it, but we've seen a lower low get formed here. So that generally indicates negative price momentum, but we can also see there's a minor level of support that's holding, but getting above this level of resistance is really important. Let's have a look at the bull case and the bear case for the NASDAQ. And why do we care about the NASDAQ? You can see the directional correlation of Bitcoin versus the NASDAQ. If the NASDAQ moves up, we would expect Bitcoin and the entire crypto market to move up with it. If it moves down, what do we expect? Bitcoin and the entire crypto market to move down with it. That's why we need to look at this. But we can start to see a little bit of a divergence. Or is it? Let's zoom in. What we can actually see when we zoom in, and don't forget, if the NASDAQ moves down, it doesn't mean immediately that Bitcoin and crypto will move down. There can be some lag effects, but what we're actually noticing is with Bitcoin, it's starting to come up. And what is the NASDAQ doing? It's starting to come up as well. And when we look at the Stanfield zones, what do we see? There's a lot of selling pressure just above where the NASDAQ currently is, from 10,550 up to 10,745. And there was a minor level of support at 10,288, which acted as a buffer to push prices higher. So the bull case is that we get through this overhead resistance, we clear 10,745, and we head up to the next level of resistance at 10,952. The bear case is that we take out the current level of support at 10,248 and we drop down into the 9,749 to 9,980 support level. Please let me know in the comments, are you bullish or bearish on the NASDAQ? Something that may really help you out. The central bank rates for the US, 4%, Canada, 3.75%, New Zealand, 3.5%, Great Britain, the UK, 3%, Australia, 2.85%, and the Eurozone, 2%. And we've seen recently that the Federal Reserve, in its last FOMC meeting, actually increased the federal funds rate by 75 basis points. And the federal funds rate prediction for April 2023, when interest rates are expected to peak, is currently 4.990%. There's a relationship between the yields and the indices. You might notice as yields go up, the stock market and Bitcoin comes down. And it's the rate of change which is particularly important. And there are many different yields. For example, the 2-year, the 20-year, the 5-year, the 30-year, and the 10-year. The best way to read this chart, and Masterclass students, you'll get this live chart in LV24, is rising yields mean increasing pressure, negative price momentum on the major indices and crypto as well. So yields up, prices down. As the 2-year yield throws a very fast signal, it's often really good to see where this could be going. When you look at a chart like this, you would say, Ken, what does it mean? There's no guidance here whatsoever. What I've done for you here is to put in the Stanfield zones, which are derived from the CTKS method. They're smart money buy and sell levels. And when you look at yields at the moment, you can see they're just under a resistance level, literally where the yield is right now. There's several support levels below that, and then dropping off far away. And there's a large resistance level above the current yields from 4.753% to 4.806%. But if we get above that, the next one is 4.994 to 5.021. Now, what's the concept here? What's the problem if yields rise? Well, remember the last chart. As yields go up, what happens to the stock market and what happens to crypto? It typically goes down. One thing that you really want to keep your eye on is the DXY, the US dollar currency index. Typically, when the DXY goes up, yields go up and the stock market falls. That's just at the current time. And the inverse occurs. When the DXY comes down, yields fall and the stock market and crypto rises. In all probability, crypto is rallying across the weekend or has rallied into the close because this level of resistance in the DXY from 111.033 to 111.237 is really strong resistance. It almost gives us the feeling that FX traders actually see this resistance holding and the dollar resuming down. Now, where could it go? If it resumes down, of course, the concept at the moment is that the markets will rally if the DXY falls. Where's the next level of support? Because this will be important to understand. It's from 110.095 to 110.219. What's the next one underneath? So if we just think about it this way, if the DXY comes down, we expect the markets to absolutely rally. But where do they stop coming down? There's quite strong support between this 108.823 level and 109.263. So that is the bullish case. Dollar comes down, markets rally. What is the bearish case? The bearish case is the dollar resumes upwards. So the dollar has resistance between 111.033 and 112,237, minor resistance around the 111,899 mark, and then 112,091 to 112,211. And that's got some fairly significant resistance at this 112,751 to 113,039. So if the DXY actually comes up, you can see it will have to break various levels to propel itself upwards again. These levels are quite important for you to keep your eye on. These are the components from the CryptoTradingKS Masterclass. First thing to do is to mark up your charts with the CTKS method. That's how you can actually get Stanfield zones. And those zones can be very, very helpful if you want to declutter your chart. And Masterclass students, I will be updating the LV series with the CTKS method version 2. The next thing you do is look outside the crypto market, checking the stock markets. You can see why dollar, the DXY, yields, federal funds rates, they all impact on crypto, and you can see it flowing through to the major indices, for example the S&P 500 and the NASDAQ. Knowing this information is literally like putting a jigsaw puzzle together piece by piece. Now we must look into the crypto market and see what Bitcoin and crypto's market structure is looking like to form that bull or bear case going forward. One thing that we see, total crypto market cap is currently 1.013 trillion. It's above this magic $1.007 trillion mark. That's really, really good. And we can see the crypto market has been supported in its upward push. And a lot of people would say this is just impossible because there's so much negative news in the markets. And there is a great deal of negative news. And being in the financial markets for more than 3 decades, if you tune into any news story, it's going to be basically negative. You're going to be able to find some negativity. In fact, certain YouTube channels are only negative. They've only talked negative, and everything is collapsing. Epic Economist is one of those channels. Quite interesting viewing, but totally negative. It's important to be aware of the plus and minus sides, but just let the market dictate where you enter and where you exit. So when we look at this particular chart of the total crypto market capitalization, we see we're above a very major line, a level, which is actually now supporting price. It's very early days because it's the weekend. And weekends are notorious for low liquidity, so things may move around, but this is a very, very good sign. This is a plus for the bull case, actually exceeding that $1.007 trillion mark. And if we come down to test this lower level of support at 987.98 billion, that's still quite positive. Coming back and retesting is just something that happens in financial markets all the time. But of course, we would prepare for more negative price action if it doesn't recover. I drew this green up at around the 29th of October, this green and red area, to give you a bit of a perspective. Is the price bullish or bearish? At the moment, it's bullish. One thing to bear in mind, the congressional elections are coming up on Wednesday, November the 9th. And in the past, with midterm election year seasonality, we typically see November as quite a good month. And it's already starting to shape up a little bit that way, but not in all sectors, but definitely in Bitcoin. And of course, that means crypto as well. We can see Bitcoin on the weekly basis has been maintaining its very tight support line here. That is bullish. When seeking to understand, is Bitcoin going into a bullish maneuver or a bearish maneuver, we can see from back in November that Bitcoin has been coming down for quite some time. There's a very, very key level of resistance here. And if we get above the 27,160 mark, that's something to just keep in your mind, that number. That means that we're taking out that resistance level. But what do we literally see here? Bitcoin has overcome so many resistance levels. It's just fantastic. There's the potential to come back up and retest these upward resistance lines. Can Bitcoin break those resistance lines? Perhaps, perhaps not. We'll have to just keep our eye on it each day. And what are the two levels that are most important to keep in your mind from a bullish perspective? One is this 27,160. The other one is 24,277. That's where we would test this particular resistance line. Now let's zoom in here just a little bit more. From a bullish perspective and also a bearish perspective, I'd like you to keep three levels in mind. Bitcoin is currently trading at 21,332. The first level is 21,000, basically the $21,000 level. If we come back and retest the 21,000 and resume up, that's incredibly bullish, incredibly. If we come back and retest this short-term resistance around the 20,776 mark, that is also bullish, provided we don't go too far below it. But if we start to get back to the 20,350 mark, it could go either way. It could bounce at support, or it could start to move down and become bearish. But if we get down to around the 19,613 mark, we're starting to lose that bullish momentum. And we would expect to test the Armageddon line, which is at 18,942. Let's put on our X-ray vision and look at the CTKS method to understand what the Stanfield lines are telling us. We've got very strong support at 20,766 and 20,539. So those are two very, very strong support levels for Bitcoin. If we come in down here, we should get reflected back up. But if we lose these support lines and they turn to resistance lines, we could be coming down to the Armageddon line. So this is a very, very critical time for Bitcoin. But if we manage to actually propel ourselves up through this 21,723 mark, you can see there's only light resistance above, at least until the 25,700 mark. So we could see, because there's an air gap here, we don't have a lot of resistance above us. This could be very, very powerful for Bitcoin and could consolidate into a bullish case. And please remember, Stanfield levels are not drawn from recent price action. They are drawn from all of price action. And you learn how to draw CTKS method lines throughout the masterclass, which is a Rolls-Royce level masterclass on crypto technical analysis. And if you would like to go and view what people say about the masterclass, you can check the link in the description of this video and just go to testimonials. It's also good to understand why I created it. It's also for a very, very special reason. It's all about knowledge transfer. And you can just go through and read the variety of different comments that different people have made in relationship to how they've found the masterclass. And thank you everybody for your very kind comment. I'm very delighted and proud to announce the Jason Rice CTKS Partial Masterclass Scholarship Awardee. A very warm congratulations to Jade. Well done, my friend. You really, really deserve it. And you deserve it because of your active learning and positive excellence. Well done, my friend. And thank you again, Jason, and all the other people who have put forward partial masterclass scholarships. You're all amazing people. One thing I suggest you do to try to figure out where Bitcoin may go in the short term, it's very good to look at the longs and the shorts. We can see the longs and the shorts spiked up, but there were a lot of short liquidations. There's been a tremendous number of short liquidations recently. When you get disproportionate short liquidations, that leaves the longs very, very vulnerable to getting liquidated en masse as well. And even though it's weekend action, we can see the shorts starting to come back in and the longs starting to buy the dip as well. Admittedly, it's not much of a dip. Across the past 24 hours, there's been 81.38 million in total liquidations across 49,865 positions. And when we look towards the past 24 hours, total liquidations about 64% of them short. The past 12 hours, about 53% short. The past 4 hours going the other way, about 69% long. And the past hour going the other way again, around 69% short. So you can see the longs and the shorts are really swapping it out, but the shorts have been more disproportionately impacted than the longs recently. And we can see across the past week and a half that's been the case. But this sets up a situation where if the longs are not liquidated, not balanced out, they can get a big long liquidation spike, and we don't want that. What we can see is that Bitcoin is holding its weekly line, that with the DXY falling down, yields are under pressure, and they're also starting to come down. And it's just literally the early days of that happening. Globally, the markets are actually in an uptrend, even though it's looking quite dark out there. But we must make sure that we don't lose this lower support on the S&P 500. And one thing you might like to keep your mind on, when it comes to the S&P 500, there's a tremendous amount of support below our current price levels. If we maintain that support, even though we may dip below this particular support line and temporarily turn it to resistance, this is a tremendous amount of support. Now, if we lose that support, we'll probably take out this lower low. So that would be a cause for some concern, but there's a lot of support underneath the current price. And I wanted to just let you know as well, there's an absolute bucket of resistance between 4104 and 4170, an absolute massive resistance. A concept of just punching through this area would be very unrealistic, but the concept of actually meeting it would be okay. That would be on the cards. So what would we say from the stance of a crypto technical analyst, actually looking at these data points and others as well? We would say there's a mildly bullish probability that we're going up. So mildly bullish price activity is on the cards. Checking out the greatest gainers: Ape, Solana, Axie Infinity, OKB, Phantom, Chiliz, and the Graph. The greatest losers over the past 24 hours: FTT, LDO, EGLD, Caspar, CRV, Mina, and LRC. Looking at Bitcoin's gravity, we can see Ethereum starting to weaken. We can see BNB starting to weaken as well. ADA is aligning. XRP just a little bit under Bitcoin's gravity. Solana under Bitcoin's gravity, trying to coincide but failing. Doge under Bitcoin's gravity. DOT aligning just a little bit under, and Matic starting to level out. Tron is slightly under Bitcoin's gravity. SHIB is quite weak. Uni just coinciding. AVAX weak. Litecoin trying to coincide, trying to just get back into gravitational alignment. Link just a little bit weaker. Atom not looking too bad. FTT suffering quite a sell-off. And recently, going to a 2-hour, we've seen the metaverse perform quite well, but always be aware these sharp angles can reflect sharply, so just be mindful of that. You can always buy lower, and in Mana we saw that absolutely play out. These sharp angles tend to reflect downwards, so be very careful of them. But the metaverse has been doing quite well. And well done everyone for popping in your BORSOG codes, and there's so many beautiful comments. Pedram said, even if the world is unkind, don't be unkind. Thank you, my friend. And Rundle Ridge, this community is an amazing place to be every day. I look forward to it every day. Thanks so much, Rundle Ridge. It's very beautiful. If you have family or friends who could benefit from positive excellence and what we do each day here, please introduce them to our community by sharing a video. We'd love to see them here. We have one of the best communities on YouTube. And please have a look through the comments. They're very, very insightful. And thank you to CC and Rollo. You're very welcome, my friend. And it's absolutely so wonderful to see people who have been on the sidelines just reaching out and making a comment is just so magnificent. Well done, everyone. We're all friends and family here. And especially well done to everyone who puts in their BORSOG codes each and every day. The markets can never scare you if you are prepared, and that is the key. If you'd like to look at episode 685, it explains this three-dimensional daily risk management technique in depth. And it's all about understanding that we control the trade or investment, but the market controls the return. And that's directly proportional to your active learning, your knowledge and courage, and inversely proportional to your blame and gambling. So it's really important to apply knowledge and courage wherever you can. Personally, I think too many shorts have been liquidated and not enough longs. So I'm actually preparing for a long liquidation spike down. So that could be very profitable because I think it will be bought right back up. So let's see how it plays out. And I am getting the feeling that this seasonal pattern in midterm election years is likely to play out. And this is one that has existed since 1946. And what that actually means is a bit of a rally into November and just a consolidation throughout November and a Christmas Santa rally. It could be quite interesting. And of course, we always make our three-dimensional decisions, our three-dimensional risk management. So we're prepared if price goes any direction, but it's good to know what direction it could go based on the probability. And we know those probabilities change on a daily basis. So please just check in each day because we have so much incredible content to go through together. And if you're going through a life pullback, please know that our love and healing thoughts are with you as a global community. You're not alone. There's always hope, and the sun will come out again. And these life setbacks set you up for the next life rally. And to end with, we always go through the CTKS creed and a look through the crypto market to spot opportunities. The CTKS creed helps to prime our mind for profitability. Those positive affirmations inside the CTKS creed help us to say, okay, I missed this one, but there's always opportunities. And knowing the universe wants you to succeed is really important. But why would we say the universe wants me to succeed? Because it does. All success in this world is a function of the effort, dedication, and commitment you put in. If you want a better relationship, put more commitment in. Put more dedication in, and especially put more kindness in. If you want a promotion at work, don't ask for one. Demonstrate that you're worthy of one by putting in the commitment, dedication, and especially the kindness. Being kind to other people is incredibly important. A lot of people don't realize that senior level jobs have a very strong foundation of being able to get along with other people. It's very hard to lead a team if the team hates you. I say this as almost a joke, but it's really, really important. You want to move together as one. Great leaders are followers first. That's why it's especially important to show every day your kindness, integrity, and gratitude. Being grateful for things is really important because life is really short. If you're grateful only when you achieve a goal, you're not going to have much happiness in life. Being dedicated and committed, winning or learning and never blaming will set you up for a phenomenal life, and that is what it's all about. And I thought it would be really good to talk about self-doubt, because self-doubt causes losses, not just financial, emotional, and other kinds of losses. Getting rid of self-doubt, Rule 306 inside the Masterclass, is really, really important. Self-doubt, a life without self-doubt is a life of, please let me know what that would look like. Stay safe out there, my friends. Take care and see you next time. Bye for now.